Matteo, thank you very much.
Thank you.
Nice to see you here in Milan. If you can start, if you could tell us a little bit more about GWM and your actuation on the market, please.
Of course. So GWM, we're a real estate specialized fund manager. Today we have roughly 1.5 billion under management. We're very much focused on Italy. We've been around for more than 20 years, based in London and Italy, mostly. And we invest in pretty much all asset classes of real estate. Our specialization in the past has been more focused on real estate special situations and real estate distressed debt with a proper real estate asset management angle. So we've done a number of transactions, also in partnerships with banks, in order to support them in managing large distressed real estate loans. And this was coming out of the global financial crisis. And I think this is going to be also a business plan that we, and a strategy that we can build on in the follow-up of this ongoing crisis. It's inevitably will create more distressed debt.
Okay. And when we think about the Italian market, how you see the Italian market with this high inflation and high interest rates?
So Italy is a very resilient market from both from an economic perspective, general economic perspective, and a real estate perspective. So values are clearly adjusting. They never adjust as quickly as other markets across Europe, but they are adjusting. We did benefit from a good inflation boost in the past couple of years, which helped rents grow and offset the cap rate expansion. So there are going to be opportunities. There is a repricing which is not as steep as we would have thought. And it's probably not going to be as steep as we would have thought at the beginning of the interest rate rise time. And it will take still a few semesters to pan out and for the real opportunities to come out. I think opportunities are going to be driven, and the price adjustment is going to be driven by lenders forcing sales of assets. And I think the lesson has been learned by the lenders after the global financial crisis not to push the can down the road and to, in a way, force sales. Give some time to their borrowers, 12, 18 months, but at some point saying, okay, we need to get the money back. So that opportunity will come. We're seeing now selective opportunities on assets that we would trade on, because obviously there's the total bifurcation of assets. Some assets that I think will need to be totally repositioned, that are not suitable for, let's say, real estate 2.0 with all ESG philosophy, but assets that are suitable, and we're seeing now a handful. I think we'll see quite more in the next 12 to 24 months.
In terms of pricing, do you see a readjustment already? You're still waiting for some more? What is your...
Yes, I think there has been adjustments. Volumes are very low. Trading volumes are very low. So again, they don't necessarily give a full indication of the real pricing would be. But the assets that traded and the volumes that do happen at adjusted prices. And adjusted prices, it's difficult to say where it is, but we don't, obviously you won't see any asset trading at a below 4 cap, but the reality is that you still see city center, good quality asset trade, also offices trading at in the 4s, which is I think it's a healthy valuation. And if you look at it in a long-term interest rate environment and factor in a 2 to 3% long-term interest rates, then, if you buy a central asset which has good quality cash flow at a 4.5, which is a real as opposed to nominal rate, I think it makes sense. But in general, all other asset classes are repriced. I would say we don't really see a repricing yet on residential, and we're out with residential sales, so we're actively selling units. And actually, incredibly, after the interest rate rise in last a year and a half ago, we actually saw an acceleration of sales on our resi products, and probably because buyers run to lock in mortgage rates which are still by historical comparison, very, very low.
Okay. We saw in the previous discussion people talking about retail.
Yeah.
What is your perspective towards this asset class?
I think retail is going to come back sooner rather than later. It's been suffering from a capital markets perspective for many years now, but the assets have stabilized. So it's clear which assets are the solid assets and which assets are not going to work. And it's evident whenever you look at an asset and you know how to look at it. And it doesn't mean that it's a dominant shopping sector or a secondary, small or large. It's just the quality of the cash flow and the sustainability of the rents. So today we're seeing some retail assets trading at double-digit cap rates, 10, 11, 12, 13 cap rates. And I think those are great opportunities because these cap rates will come down, I think, in the shorter term rather than the longer term. When investors come back to the market and interest rates stabilize, I think retail is going to be one of the asset classes that they will focus in conjunction with beds and sheds, obviously, because there is going to be less money in the office sector. So money is going to be shifted again.
Okay. And when we look at the pan-European scenario, how do you see Italy position on the investor's mind?
I think Italy, it's never been sort of a tier one country for investing in Europe, and that's driven by the overall size of the market and the fact that Italy is divided in many cities, which create a whole relatively big market. But then investors tend to come in. Investors are coming to Italy. Initially, they say, okay, we only want to do Milan, and Milan, realistically, it's a very small city. So Milan, it is a small city, and hence, there are not many opportunities, and I think the opportunity now is for investors to shift from Milan to Rome, as we mentioned, and then eventually from Rome to other cities, Bologna, Florence, Venice, and so on.
Okay, thank you very much. And how does GRI Club bring its value to GWM and to yourself?
I think GRI, we've been member of GRI Club for many years. I can't remember now how long, and I love the club format. I love the idea of meeting people and finding opportunities to meet friends and colleagues and have a chat. It's always informal and well organized. So it brings a good opportunity to enhance networking and brainstorming.
Okay. Thank you very much. It was good to see you again.
Thanks.
Thanks, Matteo.